Good morning, everyone. Thank you for tuning in to our monthly show of Let's Talk About Real Estate with Area Mays. Today we have a special host for today, and without further ado, I'm going to turn it over to her so she can introduce herself and hope you guys enjoy the show on today. Miss Ruth Phillips, it is in your hands.
Thank you. Good morning. My name is Ruth Phillips, and I'm with Cadence Bank. I am the Community Development Division Manager for West Tennessee and in the entire state of Mississippi. I'm also a loan officer at heart as well. I want to share today with you some important guidelines as far as the home buying process, exactly what to think about, what to start getting yourself prepared for, how to go ahead and like get things in order so when you do start, you'll be ready. Let me try to figure out how to share my screen. Did I do it? I think it's trying. It did. Okay, so let me put it in slide mode. Okay, I can't tell if it's sharing or not.
It is Sharon. If you go to the slideshow at the top,
Mm-hmm.
and then
I thought I clicked on that. I'm sorry about that. I thought I clicked on that. Okay, so what we're going to do is really quick is go through the home buying guide process. It's very easy. If you want to take notes, you really can. I want to get you prepared for applying for a mortgage. Many of you have probably started thinking about, oh, if you're on here, I know you're interested in buying a house. So you might as well go ahead and do what's required as far as getting prepared to get one. Whether you are a first time home buyer, a second time home buyer, it really doesn't matter if you're new to it. Some of this exact same stuff we will be needing when you apply to obtain a mortgage. Sometimes it can be a lot to take in at one time. And so if you got time to take notes, please do. If you have questions, please put them in the chat, okay? But this presentation is an easy guide for you to walk through step by step on getting a mortgage. And Thomas, I'll send this guide to you when we actually get through. If somebody wants it, that they can, you can be able to share it. The first thing you're going to do is make sure your credit is where it needs to be. A lot of times people can get a free credit report from annualcreditreport.com. And with annualcreditreport.com, it will give you your credit history and what's out there currently. However, it does not provide a credit score. Most of these platforms, you'll have to pay for the score if you want to go in that direction. What we look at when you're getting your credit, we want you to go ahead and get your credit. I like you to know before you go. That would help us as well. But if you don't want to do it that direction, go ahead and just apply for a mortgage. We will pull a tri-marriage credit report. We pull them from Equifax, TransUnion, and Experian, and we merge it into one report, but it'll have three separate credit scores. When you're pulling your credit, please, whatever you do, if you have your credit frozen and you know you're about to apply for a mortgage, please call them, each bureau. Now, you can't do this by their online service. You actually have to call them, each bureau, and go ahead and have them to remove the freeze. And they'll say for how long. You need to say indefinitely remove it so that even after the file is done, we still need that credit report open because you could be subject to a soft pull at the very end. And we monitor credit just to make sure you're not out opening new accounts. Okay. So that's one thing that happens. The credit report is good for 90 days when you apply for a mortgage. At the end of the 90 days, around your 85th day, the lender will notify you that your credit report is ending and that at this time you have either decide, like some people decide they don't want to buy right now, or maybe you just haven't found the perfect home for you and your family. So at that point, we would have an option of reapplying or refreshing your credit report and starting the 90-day clock again. Or some people just wait until they find that perfect house because they've already gotten approved. They know exactly how much they qualify for, and we've worked through all the credit issues. If this is a good place too, when you get your credit pulled and knowing your credit, if you see errors out there on your credit report, this is a good time for you to connect with the 3 bureaus that say, hey, I see an error on my report. That trade line is not mine. That could be fraud. Those type of corrections are at a good place to go ahead and get those done. And I do recommend that everybody should know where your credit is, period. Some people use Credit Karma. Credit Karma is not accurate when it comes to your credit score, but the information that they do provide is accurate. Okay, it's information and not a score. The closest I've seen to a tool that'll be close to a mortgage is myfico.com. And myfico does cost money for you to use. Okay. But again, you can go to annualcreditreport.com and they will provide you a free credit report. You can do it for all 3 bureaus. In this area, I recommend that you just get an Equifax so you can at least get one once a quarter per year, okay? Look at it, make sure everything is reporting correctly. If you have disputes on your credit report, now that's a good place to look for them. Disputes are things that you don't agree with them, whether it's somebody has committed fraud against you or it's a debt or a charge. You need to go ahead and kind of look at those and see, is this my credit? And if it's your credit, you may want to try to ask your lender, hey, should I reconcile with this debt? But most of all, you need to remove the dispute unless it is fraud. Now, I say remove the dispute because if the dispute balance is greater than $1,000, when you make it to underwriting, you're going to have to remove the dispute or pay off the debt to resolve it. So I kind of like people to look ahead of where they're going, especially if you have disputes on your credit report that that are yours. Let's talk about your credit score. While there's no specific credit score needed to buy a house, however, it is best if you do have a strong credit score because the stronger the score, the stronger the opportunity for different loan products. FHA says between 500 and 580, you're going to need a down payment greater than 3.5%, and you must get a DU approval. DU is an electronic system that is used by Fannie Mae to run your application through to give you an instant approval. If you don't receive an approved eligible between 500 and 580, you won't be eligible. If you do receive an approved eligible, most likely your down payment would be greater than 3.5%. And I don't know any of the down payment assistance programs, if you're a first-time home buyer, that will allow you to purchase with a credit score under 580. Okay? Between 580 and 670, your credit score, 669, your credit score is considered to be fair. So, but there are some programs, FHA will let you go to the max of 3.5% down, least amount 3.5% down. There are some 100% programs out there, and there are some down payment assistance programs that will allow your credit score to be there. A good score is anywhere between 670 and 740. It gets better after 740 to 800. That's very good. If you have an 850 or higher, that's considered to be exceptional in your credit score. So what builds your score is paying your bills on time. And that's the easiest and most efficient way to correct your credit score. So in the past, if you've had some credit score issues or you've just had some life to happen to you and your score was down low, so at that time, you need to start paying your bills on time. You need to lower your balances on your credit cards. You need revolving credit cards because that counts for about 30% of your credit score. You need to look at how much debt you have going out every month versus how much income you have. And whatever you do, be consistent when you're using your credit, okay? So try to keep any account that's been open leave it open, because we look at the history. How old is the account? And even though you may not use it anymore, but if it is old and you've had it for 10 years and you've not used it in the last 5 years, unless the creditor closes it, leave it open, because it's going to carry your history, and your history is going to help you improve in your credit score. Okay? Now, the next thing we do when we're applying for a mortgage, we determine your debt to income ratio. But that comes through basically looking at your income and how much monthly debt you have going out every month. There are ratios for different loan products, but before we go there, I kind of want to talk next, and I don't have a slide for this, is about your income. Your income is more important basically than your credit. So if I was going to put this in order, I would have put income first, because you have to have the ability to repay the debt. If you don't have the ability to repay your debt, then you're going to be affected by what? A low credit score. So to me, credit is easily reconciled, where getting a job, keeping it, and staying on that job and working 40 hours a week for a 2-year period of time, it takes a little bit more time to establish stable income. And so that's what's important to me, is your stable income. You have to be able to repay the debt. If you're on your job and you've been on your job and your job is a 40-hour a week, please try to work those 40 hours. I know sometimes people are like, oh, I got off early, I didn't feel like working. But if you're trying to apply for a mortgage and you're going to buy a home, and your company offers 40 hours a week, and you apply using that 40 hours a week, then you need to be found working those 40 hours a week, because it's going to show up in your pay stub. Okay? If you don't, we moved into what's called variable income. So we move into variable income, then that's going to give you lower income to qualify, because now we're calculating it on an hourly pay less than 40 hours a week. And so I encourage you, if you have a 40-hour job, please work your job. If your job does not offer sick time and it offers a vacation and you are off work, I'm sorry, I'm talking. I forgot to bring water to my desk. And you are off work for illness or, anything, your child is sick, please use the vacation time available for that time instead of missing it without pay. Sorry about that. So if you are self-employed here, you need to be self-employed for 2 tax years, and you must show income in your tax net amount in order to qualify for a home. Sometimes people are only self-employed for like a year. If you're going conventional, you might be okay with that, but we cannot guarantee it. You actually need a 2-year tax calendar year. So if you started your own business in 2021 and it's 2025, yes, you have a 2-year tax. You should have filed taxes on that self-employment in 21, 22, 23, and 24. And so that would have given you a solid history of being self-employed. If you are a commission only or a cash person, you work as a barber, as a nail tech, as a stylist, anything of that nature, then you need to file your taxes as well if you're going to count, that income to qualify you to buy a house. Now, in getting qualified with that type of income, you're going to have to claim the income. A lot of times people in those areas, they may make a lot of money, but they expense the money out, and so their net pay is lower than what they actually gross. So be careful there. If you are self-employed and you're interested in buying a home and you kind of want to back into it to kind of see how you should be filing your taxes, I advise you to go ahead and reach out to a mortgage lender. You can call me and I'll give my information at the end, and we'll be able to, kind of help you back into what you should be claiming on your tax returns. Now, when we look at debt to income ratio, what we're looking at again is how much you owe out compared to how much income you're bringing in. There's two ratios that we look at. One is a housing ratio. That is how much the house note can be. And usually that doesn't go over 33% of your gross income. So if you are, just say I'm getting a calculator out. Just say you earn $3,000 a month, and I'm just using that as a rough number. So $3,000 a month and 33% of that is $990. Okay, that's how much the house note can be. But the other ratio we use is called your debt to income ratio. We take that same $3,000 and we multiply it by, and I'll use 45% because most of the down payment assistance programs, their back end ratio is 45%. So that gives you $1,350. So that means the house note of $990 and all other reoccurring debt cannot exceed $313.50. So that gives you only the room to have $360 a month in monthly debt. And it's debt, not living expenses. Living expenses would be things like your utility bill, your cell phone bill, your auto insurance, your daycare, cable, internet bill, things of that nature, your grocery bill. Those are things that your living expenses. And we don't take in consideration the rent either, because guess what? When you own the home, you no longer pay rent. So we wouldn't even include that in the calculation. But if you make $3,000 a month, that is what your house could not exceed $990 and your debt could not exceed $1,350 if you were going to go with perfect ratios of 33 and 45%. So if you calculate and you're over the 45%, what I recommend is that you start doing debt elimination, because you know it's going to be a challenge to find the house that you're interested in purchasing at that housing ratio. So what you've got to do is start looking at your debt and say, okay, I can get rid of this credit card. I can pay this off in this amount of time or that amount of time until I can get down to the house note that I actually want, and it will fit into my monthly budget. So that's what you need to do for that. Okay. Next. So we talked about credit. We talked about income. We talked about debt to income ratio. Next thing we do is we determine your down payment. Like I said, there are lots of programs available that will allow you to have zero down, and then there are programs that will allow you to have loan types that will allow you to have 3% down or 3.5%, and then we just keep climbing and climbing and climbing with the down payment. But it's all going to be determined on your income and your credit score to determine exactly how much your down payment's going to be. A lot of the first-time home buyers or people who have not owned a home in the last 3 years, they may be eligible for 100% financing. The 100% financing that is offered through many lenders is 100% financing. That means zero down payment, and there's no PMI included. But they also have income limits. Like right now, the 100% down, the income limit is $66,400. So if the applicant, not household, just the person in the app on the application, makes less than $66,400 a year, they actually can purchase a home with zero down and have no PMI. But there are ratio requirements there. FHA, your down payment would be 3.5%. And you can use state down payment assistance program. If you're in Mississippi, Mississippi Home Corporation offers one. If you're in Tennessee, Tennessee Housing offers one. And the same thing for Arkansas. Most states have a housing assistance program available to them. I know Louisiana, Alabama, Texas has one. And again, like I said, Arkansas, Tennessee, and Mississippi, but all of them have income requirements minimum, as well as credit score, as well as debt to income ratio. You can save up for your down payment. And if you say, I don't meet any of these income limits, I exceed them, I'm going to have to save for my down payment. So I advise you to go ahead and start saving in your down payment. You can take advantage of your 401k by increasing what you're paying in to your 401k if your company allows. Pay additional funds into your 401k, and then make sure that your 401k will allow you to pull funds from it for the purpose of a primary residence. Okay, so those just a few things, and we do offer USDA. USDA is a rural housing program, and if you're in not Arkansas, but in Tennessee, you would be in Fayette County or Tipton County. If you are in Mississippi, there's a few little spots in DeSoto County, but most likely it's going to be outside of DeSoto County. Okay, but they do offer 100% financing. Things I recommend that you gather, okay, or know how to access these things immediately. So if you applied for an application for a mortgage today, you should know how to pull out your most important income, your pay stub. You should know how to know your employer's address. You'd be surprised of how many people we make application with. And when we make application, you ask them for their work address. They don't know their work address. They just know they work at FedEx. They just know they work at Walmart. They just know they work at Cadence and it's on Winchester. But you need to know your full address for your employer, your full home address. I know I'm sounding a little tweaky, but people sometimes they don't know. Oh, I live with my grandmother. What's the address? Oh, child, we live on 4th Street. Man, what's the street number? We have to have complete addresses. You need to know how to access your W-2 form. And I'm talking about the original W-2 form that your employer provided. A lot of employers you're able to pull that off their intranet site at work, or you may have ADP. They're out there on those forms as well. But anytime you get a pay stub, and you're able to pull the pay stub digitally through some type of app, they should also have your W-2s for the last 2 years. If you, and I didn't talk about this, and I'll bring it up right now since it's on here, the 1099 forms. 1099s are usually associated with disability, Social Security, pension, those type of things. And you get those every year from Social Security, whether it's disability or it's your real retirement or Social Security check of that age. That income can be used. If it's disability, you have to prove that that disability is going to last for at least 3 more consecutive years. Also, child support can be considered. If you have an order, if you do not have an order. If you don't have an order, you just would have to provide bank statements to show that the absent parent pays you regularly whatever amount that they're paying you. So you're not forced to have the absent parent on child support through the state organization. You and your child's father or mother may have already agreed that they're going to pay so much money. So long as they're doing that consistently, you can count that as far as income. If it's an order, you have to have a complete copy of the order and a payment history to show that you've been receiving that child support. Most of the time it's for 3 months, but it could actually go all the way out for 12 months. So be sure that you can access that information. If for some reason you were on child support and somehow it ended up on your credit and it has been resolved, you'll have to have a documentation from the Child Support Enforcement Unit letting us know that your child support order is over and you're free of that. And it's called a cease order, okay, for child support. Now, again, it can be used, but again, like disability, it has to still have 3 years of life remaining. In Mississippi, child support goes to age 21. So if they're 18, of course, you can still count it out, long as it's 3 years from the note date. Same thing for Tennessee, but it ends at the age of 18, or if the child is in the 9th grade and they started school at a different time. And so long as they have 3 calendar years of remaining life on the child support order, you can count that as far as stable, reoccurring income. Your tax returns are usually only used With Cadence, I'm going to say that again, with Cadence, if you are self-employed, if your commission is greater than 25% of your base salary, or if the state agency that you're using for down payment assistance, whether it's Tennessee, Mississippi, or Arkansas, they use your tax returns to show that you have not owned real estate in the last 3 years, okay? So we have to be really careful when we're gathering tax returns. I've had people gather their tax return only to find out that they didn't disclose to me that they had a small business, that they had expensed everything out. If it's an expense, it's considered to be a debt. So keep that in mind, okay? Let's talk about bank statements. Be able to upload your bank statements or have access to your bank statements is very important. Most of the financial institutions, they have apps. The statements are on the apps, but we also use a program here at Cadence called Benicity. When you go in and you give access for us to pull your bank statements directly from the companies, and we use them that way as well. Your 401k, you should be able to access your most recent statement and to know if you're able to pull money out of the 401k for the purpose of purchasing a primary residence. Same thing. Sometimes credit cards, they may report one thing on your credit report, and you'll say, Ruth, I already paid that credit card off. All I need is your statement to verify that that credit card is being paid off. So know how to obtain this information, okay? Any other debt that you might have. Let's talk about student loans really quick. Student loans, they are out there. They're not going away yet. Some people were blessed enough to have them forgiven, but some of us are still out there dealing with student loans. These are the rules for student loans. If you get FHA financing, they will charge half of the 1% as the monthly payment for the outstanding balance. So if you owe, just say you owe $15,000, right, on your student loan. So that's 1,500 would be 1%. We would divide that in half, right? And then your payment would be $750 a month. I don't think I did that right. Hold on a minute. No, I'm sorry, it was $150. We would divide that out and your payment would be $75 a month compared to 1,500. If you go a conventional loan, Fannie Mae requires 1% of the outstanding balance. That's when it would be $1,500 a month, okay? If the student loan is in forbearance for more than 12 months from your note date, the day you close, then you use 100% program. We will actually allow whatever the forbearance amount is. It could be actually zero. If you are in an income-based repayment plan and the payment is zero and you can provide the agreement, we will use that payment as well. Next. Now, this is important to me. I recommend that you talk to a mortgage professional, not your family member, not your friends, not somebody who's been renting forever and they are, have no interest in buying a house. You need to call somebody up who actually does this for a living, not part-time, but they are committed to it for a living. That way, they are fresh on all down payment assistance programs, all of the guidelines that are out there that may have changed. And trust me, we get a release every week of different things that change in the mortgage industry. So you want to make sure that you're connected to a professional. They should have a license in order to actually do mortgages. So keep that in mind as well. They should be able to be reached. Sometimes you have to be patient for them to call you back. Like today's the end of the month, and we are covered up with trying to get loans closed for tomorrow. So if you're calling me today, you may not get a call back till later on this afternoon once I'll get everybody set and ready to close for tomorrow, because they are what? Priority. Like I would take care of you as a priority as well if you were closing tomorrow. So that's what's important there. Any other thing I can think about? I'll look at it on one more screen right here, and it talks about getting a fixed rate or an adjustable rate. Right now, I would recommend getting a fixed rate. It would help you stay on budget. There are people who still get adjustable rates, but usually they don't at this time. Here are a few loan products that Cadence offers, up to 97% on their conventional loans. Then we have, 80% if you don't want the PMI. FHA starts at 3.5. They are assumable. There's no income limit, but whoever assumes your FHA loan, they must qualify. The USDA has, which is rural housing, it's just the same as USDA. They do have an income limit when you apply, and it's per county, per area, and the properties must always be in the rural area. They do have a website that we go out, put the address out there just to make sure that the property itself is eligible, as well as the buyer being eligible for the program. If you are a veteran, thank you so much for your service, or the spouse of a deceased veteran, thank you as well. You're eligible for 100% financing, no down payment, and no PMI. That's a great program for our veterans. We do have some special programs that offer 100% financing. If you are a physician, any other professional person who earns more than $250,000 a year, we have a program called Right at Home. If your income is less than $66,400, or the property you purchase is in a low to moderate census tract, you would be eligible for 100% financing. Or if the property is in a majority minority census tract greater than 50%, and your income is less than $166,000 a year, you would be eligible for 100% financing and no PMI, no prepayment penalty, and you are able to partner the local down payment assistance programs like the City of Memphis program, or Shelby County has a program, but you would not be able to partner the state programs with it. Last but not least, I'm Ruth Phillips. I'm a division manager here at Cadence Bank. If you're buying a home, I'd love to help take the stress out of the process for you. I'm available. I usually start work at 8:30, and I normally work to 6:30, 7 o'clock. 7:30 is my latest. But if you have any questions, this will be a good time for it right now.
If anyone has any questions, they're more than welcome to ask in the chat.
Oh, it's some out here now. It says
And
30.
then there's a few questions that's in the Q&A.
Okay.
Some credit cards provide a FICO score. Is this score reliable?
Sometimes it is. Sometimes it could be liable. I wouldn't sink my coat on it, but it would give you in a good range. Again, my FICO is the best tool that I have seen that is closest to an actual mortgage report. What is counted as income, gross amount? Your gross amount. And that's what's important about. The question is, what is counted as income, gross amount, or net amount? It's your gross income. With your gross income, that is overall how much you make before they take out taxes and benefits. I recommend that a lot of people would look at themselves and say, okay, I gross this, but I live out of this. I want my house note to partner up with this amount here. Okay? Any question? Does that answer your question? But we do it all based on your gross income. The only time net, and I don't consider it as net, but on your tax return, if it's an adjusted gross income, that is when you're self-employed that we would look at that, not your gross. Because we're doing it again based on the amount that you pay the IRS, what you report to the IRS. Because every employer reports your gross income to the IRS. Okay? Any other questions? Thank you. Okay, so the next thing would happen after we got all this done, you've got your mortgage, you've gotten yourself pre-approved. you're ready to actually take your pre-approval letter, call up Area and say, Area, I've gotten pre-qualified with Ruth Phillips at Cadence Bank. I've already provided her my income and asset documentation she has validated. So that gives her an extra sense of security that we really have a loan that is ready to go, and we can go ahead and start looking for a house. Any questions? Maybe there's one more out here. Yeah, I will email him this information. Thomas, I'm going to send this to you right now before I forget.
Okay.
Second.
And I have another question.
Go right ahead, sir.
About how long is the time frame to get that letter that you were talking about? Someone asked.
Okay, so if you apply today and you complete your application in its entirety, your credit is not frozen. We get the credit pulled. I'm able to verify your income, verify what program, your assets. There's nothing there. I usually give an answer back the same day of application. I've got somebody now I've been chasing down since Monday. So hopefully after, she's supposed to be available at 12. So it have taken me that many days to get her, because we just keep missing each other. So it's just going to be depending on how complete your application. Most of the time it's in the same day. But if you apply at night, you got to give me a chance the next morning to go in and get it.
How long is a pre-approval letter accepted?
90 days. Because remember, the credit report is only good for 90 days. At your 85th day, I notify you that your credit report is expiring in 5 days. And then at that time, we decide, okay, Ruth, I'm in hot pursuit of this house and we're not going to be ready in those 5 days. Then we do go ahead and repull your credit. And then the clock would start again for another 90 days. I have plenty of people who apply 2 and 3 times before they find the perfect house for them. Thomas, you want to confirm that you received the PowerPoint? I think it says something went wrong.
It hasn't come through yet. Let me check again.
Let me look again. I'm reattaching it now.
Okay.
Now check and see if it's there. It wanted you to download it to a website. You don't have to do that. I fixed it.
I got it.
Great, 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 great.
Another question just came in. What is a good guide to paying off debt not to affect the FICO score?
Trying to keep your credit usage at 30%. So if your credit card max is $500, try to keep your balance at least $150 or lower. When you don't use your credit, it could affect your score as well. So you just kind of have to find a balance. I've informed people, like, if you've got your credit score where you want it to be and you're not really using your credit, but we try to keep it there. So you're going to have to charge on it this month, pay it off next month, and kind of play with it like that back and forth. What about the number of credit accounts? If they are all good, you're fine. But some programs require you have at least 2 trade lines with 24-month payment history, or 1 trade line with 24 and 2 12s. And let me back up, because I didn't say this when we talked about credit. You don't always have to have a credit score or credit. If I pull your credit, you have no credit score, no trade lines, then what we look for then is non-traditional credit: rent, utilities, phone bill, car insurance, life insurance, daycare, any debt that you pay willingly, savings, 401k, anything that you pay every month willingly, we'll use that, and you can prove the history of it. We can use that for your non-traditional credit. You're welcome, Miss Bertha.
Does a pre-approval letter only be used for buying a traditional home, or can you use it to buy a tiny home or mobile home?
We do mobile homes here at Cadence, and most of the time you can use them for them as well. A tiny home, they haven't ran into very many tiny homes. As long as it's on a fixed foundation, I think you'll be just fine. Outside of that, it may be considered to be a mobile home, and you do have to get pre-approved to use that program. And getting a mobile home, you have to have the wheels have to be off and everything on it. So new construction. We offer 2 types of new construction loans. We offer a one-time construction, and that is where you get everything up front and your final mortgage is set in place, but you do one-time close. You just close one time. Or we do the traditional bank type, where you would go to the bank side, get a construction loan, but still at the same time on the mortgage side, you have to have your permanent financing in place and go ahead and build like that. So you have 2 options, but we do offer both. And people ask me all the time, which way would be my favorite? And I'm not really sure I have a favorite, because the one-time construction, okay, so if, say for now, we build one-time construction and the rates are in the 6s, and then by the time my house is finished next year, I could modify that rate down to whatever the market is at that time. But if the market is higher, then I'm going to stick with what I have at 6.5. So it's kind of up to there. On the 2-time construction, you would not have an opportunity to modify. When the house is 100% complete, you would have to pay off that construction loan with the bank, with the mortgage, and go with whatever current rate we have available at that time. I don't know if that makes sense to you. I don't know what current rates are today, because I've been busy closing. And so let me see, can I pull up something? One second for me. And again, rates are always based on loan type, credit score, and loan amounts. Okay, so I'm going to give you something very general.
And while we're waiting for you to pull that up, Miss Ruth,
Uh-huh.
I put in the chat the PowerPoint from today. So if anyone
Uh-huh.
liked it, they're more than able to download it. If they're not able to download it, just send me a chat to say that you would like it sent in the email, and I'll send it to you in the email.
1 second. I'm trying to open the rates. So if we're going to close today on a 30-year conventional loan amount greater than 175,000, your rate today would be 7%. That's with 5% down. If you're going to buy and use FHA today, your rate would be 6.875. If you decide that you wanted the 100% financing and you were eligible for it, your rate today, we have a great opportunity going now. Your rate would be 6.375. And that's 1% off the rate at 7% if you use one of those programs. So the rates they are back to normal. So we are running normal rates right about now. Don't see the link. You need the link to the PowerPoint. Is that what she's asking?
I'm sorry, didn't send it to the right audience. Putting it in the chat now.
Okay.
PDF.
Okay, it's out there now in the PDF form. Any questions? I've enjoyed this morning. Some good questions.
We have a hand raised. Miss Brenda, do you have a question?
So she's trying to unmute.
Okay, can you hear me now?
I can.
Oh, okay. Thank you so much. This is so good. Okay, so with your information that you provided, which is great, and you're located where in Memphis or you located in Mississippi? I know
I'm
you're
in
licensed.
I'm in Memphis. I'm at 7800 Winchester Road, but I still
I
work
was-
from home daily unless I have an appointment set up. So if you want to come in to see me face to face, you have to set an appointment.
Okay, my sister lives in Memphis. They're looking for a home right now. I'm in
Okay.
Mississippi, and I'm looking because I'm tired of paying Uncle Sam. I'm gonna be perfect. I'm gonna be very transparent. I pay out so much money in taxes each year because I'm renting. I'm an apartment, and I just need to get somewhere.
Well, I finance in Mississippi as well. So just because you come see me here in Memphis does not mean I can't finance in Mississippi. Matter of fact, we do. We do. I'm closing some loans. I closed one this morning in Mississippi, and we'll close two tomorrow in Mississippi.
Do you expect to see the interest rates dropping anytime soon?
I have no idea.
Yeah, I know we got a lot of going on in
A
the
lot going
states.
on, and we are finally pretty much back to normal, quote unquote,
Okay,
rates.
okay,
If you're looking at the COVID rates, we would be looking at another disaster like COVID was, something of that nature. But right now, no, I see them tailoring off where they are right now. They're just kind of like bouncing around between seven, and I've got a couple last month that was 5.75, I think she was. So,
hmm.
but yeah, that just kind of like bounced around.
So two more questions.
Mhm.
So if the rates do fall, let's say I give you my name and they say you see the rates falling, can you just contact me and let me know that the rates are falling so I can, or should I just go ahead and do my, I'm
How
not
about
quite,
we do the application, or you take my information and I can put it back. I can put it in the, I don't know how to put it in the chat, but I can put it out there and you can call me. We can get started. Now, what I
yes,
do for my customers, if the rate falls after you're under contract, so you don't get a rate till you get a contract. After
right.
you're under contract and the rate falls, then I will try to renegotiate your rate.
Oh, okay,
And it
okay.
is work. And it may not be a whole whatever down to the new market rate, but it could be an eighth cheaper. And a lot of times, the good thing I've been able to renegotiate, but at the same time, they don't have to renegotiate because if the rate went up, I wouldn't be asking to take you up. So
Right,
once you're locked, you got to be okay with the lock.
right. My other question is because, okay, like I have stable income through my retirement and through my Social Security, and then I have these jobs on the
Mhm.
side. I like to look more at my stable income. Hopefully that tells me, real upfront. Because according to my my W-2s and all that, my income is way up there. But my stable income is what I really want to look at. So how do you balance that? I mean,
You
because I'm
have
not.
to,
Go ahead.
oh no, you go ahead.
I mean, I want to be able to say if I don't have this extra income, I just want to be comfortable. You know what I'm saying? I want to be
Yes, ma'am, I
comfortable.
do. I do. And what you have to do then is look at your life and lifestyle because only you know. Put yourself on a budget and say, I don't want my house. If I keep this little job, great. If I don't keep it, great. I'm still able to pay this amount out of my retirement and Social Security as what a house note.
Yeah, that's what that has been a concern because I mean I pay a pretty good penny for my rent. And I said if my house note could be about what my rent is, that's no problem. Hey, that'll be great. It's
And
over $1,000.
it can
Yeah,
be, but you've got to be okay with the property that you select for that house note.
yeah, yeah. That's the thing. All right.
Most
You
people,
have
if
been
you're working now, most likely you're going to continue to work because a lot of retired people don't want to be home. They don't want to be by themselves every day, or even, they want to get out in the public. That's one of my deals. I'm close to retirement in a few years, and I'm like, okay, am I going to really retire or am I going to say I'm retiring? I don't know because I like people. I love my job. I love being a part of somebody's dream come true. So it's kind of hard for me to say, oh, yes, I'm going to retire. This is going to be my last day doing this. I just don't have it right now to say that.
it's funny you should say that because I retired from my secular job 11 years ago, but I've never stopped working.
And that's usually the case too, because I can tell now just talking with you, you're a people person. And
Yes,
we
ma'am,
want
I
people
am.
every day. We want people. I'm in need of people every day. And even though I work from home, I start my day with a group of people every day at the gym. Same people, same time. I got adults to talk to, people to talk to face, but I'm a people person. So yes.
And I love what I do for Oak Hill because that's one of my jobs. And I'm a musician
Okay.
and some other little things I do.
Okay. We won't ask you to sing this time, but I might.
No, ma'am. What have? Thank you so much, Miss Phillips. Thank you.
Absolutely. You're more than welcome. I enjoy these classes. I love to educate the buyer, the consumer. We have to be up on it. We need to be prepared for home ownership instead of just jumping out of renting because it is a responsibility. You still got to pay for the utilities, you got to pay
Mhm.
for the upkeep, you got a yard now, you got a flower bed, you got to have, the insect stuff, people coming by to keep your house sprayed, spiders during the spider season, all those things. You got heating and air to care for. Uh, those little washers that are so important in the bathroom sink because once it starts to drip, you need to change it immediately because I've seen a small drip eat up a whole bathroom cabinet, which costs
Wow.
twice as much as that little ring would have cost to put it back in there. So we have to look at all of those things. Like I said, maintenance of a house, keep just the upkeep on the house. We're in the South, so we get, of course, rain and wind and all of that. So we're going to have rotten wood from time to time, but we got to keep that replaced so the stability of the house stays in place. So it's more than just, oh, I got a house. Oh, we got upkeep and responsibility. So I
Mhm.
like when people like everybody out here now, you're educating yourself and getting prepared to even know, do I really want to do this? And I see people from time to time after they have a class, they come back and they say, Ruth, I don't want to do this. And I'm like, okay.
No, I really want to do this because I'm paying
I
Uncle
think you
Sam a
should. I
lot of
think we
money.
should own a home. I think everybody should own a home who wants to own a home.
Yes, ma'am.
Yeah. And if you can't own one now, write the vision, make it plain, but
Amen.
get some discipline and stick with the discipline because this will take you from a 398 credit score to an 800 credit score. But it's going to take discipline and focus. I tell people all the time, if you've had bad bank statements and you got overdrafts, go to the bank, opt out. It will prevent your check debit card from overdrawing your account. So what? You're in Walmart, somebody behind you, and you got to put something back. You don't know them people. Put it back,
Mhm.
because your focus is bigger than, oh, this lip gloss I'm buying. I can take that off and then it'll go through. Well, is this really worth it, or do I want a house?
Yes.
So you have to determine and stick with it. Stick with your focus. A lot of times people take lavish vacations and they rent. I'm okay with that if that's the lifestyle you want. But if you want to own a home, you can miss 1 year of taking that lavish vacation. Set that $10,000 aside, because you're gonna have to pay it out before you go. Either put it on a credit card, but you're still gonna pay for it, and put it in your budget to save that money. There are all
Yes.
sorts of banking accounts out here now that have high yield savings. And if you're saving your money, you're going to be making more than 2 cents on the dollar, or whatever. But you can do that. Just make it a focus. Write it. Put it on the wall. Find you a picture of a house. Plaster up every room you go in and out. Put it in the refrigerator. Put it in your closet. We're going to go to the bathroom for sure. Hang it up in the shower. But make it a focus if that's what you want to do, is own a house. And don't be dismayed or upset that you don't start in a big house. That's a lot of the issues now. People don't want to start with a starter house. You start in that house, you stay there, you get stronger and stronger as a buyer. But while you're getting stronger and paying a note, you are building equity. When I got a little bit more saved up, area, what's the value of this house? Let's sell it area. I'm going to take that money and what? Buy up. Because now I've been in this house long enough. I got a bigger down payment, and I'm able now to what? Move up in my housing price.
Amen.
So make a plan and please stick with it. The last thing the bank wants is a foreclosure. I don't care what anybody else tells you. They're in the business of loaning money, not selling houses. We want to do mortgages for you to buy a house, but we don't want that house back. We don't. We want you to pay for it. We want to send you a deed that says stamp, paid in full. Yes, ma'am. Any other questions? I've got on my little soapbox now. That's the part of me, that passion part start coming out, so I got to calm down.
That's all right.
Any other questions, Thomas?
I don't see any at this time. You did an amazing job, Ms. Phillips.
Thank you so much. Thank you for inviting me out. Thanks for everybody who came to listen. If you have any questions, you can reach me always. My number is on the back of that PowerPoint. But if you don't have time to get the PowerPoint, you can reach me at 901-643-1121, or you can always reach me through Area Maze.
Thanks again, everyone, for tuning in to Let's Talk Real Estate with Area Maze. But today we had Miss Ruth Phillips filling in for Miss Area Maze. So if you guys who are on Zoom want to stick around and ask any follow-up questions, you're more than welcome. But this has been a production of Oak Hill Regional Community Development Corporation, bridging, building, and belonging in the Mid-South region and across the state of Mississippi.